Now, lately, the focus has been more on altcoins and XRP, but the reality is that we are probably going to need Bitcoin to hit around 100,000 before we see big multiplier gains on everything else in the market. And believe me, I am waiting for it. I sort of just sit around these days eating boatloads of KFC, Papa John's, or any other indulgence that could be clogging up my arteries. But I can't help myself. The stress of crypto is real, especially when you have lots of money on the line. But today I wanted to quickly go over the possibility of Bitcoin hitting $100,000 in the next 18 months. I have another article I will be going over that just released on The Motley Fool, which I will also link up below in the description if you want to check it out. But basically it says one of Bitcoin's fundamental characteristics that influence its price most is the halving. A halving event occurs approximately every 4 years, reducing the reward miners receive for adding new blocks to the blockchain by half. As a control for the only way new Bitcoins enter circulation, by reducing the miner reward, the halving essentially slashes Bitcoin's inflation rate. By reducing its inflation rate, the halving alters the dynamics around Bitcoin's supply and demand. With the halving, even if demand remains constant, its price must rise to offset the reduced supply. So far, Bitcoin has undergone 4 halvings, with the most recent one occurring in April this year, cutting the block reward from 6.2 to 3.2 BTC and pushing its inflation rate to less than 1%. While it might not seem like a big deal, the halving process is the most significant factor that has affected Bitcoin's price over the years. Historically, Bitcoin tends to see significant price increases in the year following a halving. On average, Bitcoin has jumped roughly 125% higher in halving years. If we measure Bitcoin's price at the beginning of the year, which was around $45,000, a 125% increase would put its price at $99,000. This historical pattern suggests that Bitcoin could come very close to the 6-figure mark by the end of the year. If things unfold similarly to past halving years, Bitcoin could find itself near 6 figures, but not quite. To add a little more certainty that it has what it takes to hit $100,000 sooner than later, there's another factor to consider: spot Bitcoin ETFs. In January 2024, 11 spot Bitcoin ETFs were approved, marking a significant milestone for the cryptocurrency and the greater crypto market overall. These ETFs are designed to track the actual price of Bitcoin and offer investors an easy way to gain Bitcoin exposure through traditional brokerages without having to navigate complicated cryptocurrency exchanges. Essentially, the spot Bitcoin ETFs democratize access to Bitcoin and open up the cryptocurrency to new buyers. While the ETFs will allow retail investors easier access to Bitcoin, the major effect of these ETFs is seen in the realm of institutional investors. Spot Bitcoin ETFs help open up the doors for institutional investors to buy Bitcoin by providing a regulated, familiar investment vehicle. We are starting to see interest grow as more than half of the top 20 largest hedge funds now have Bitcoin exposure, and this number will likely continue to rise. We are still in the beginning stages of the spot Bitcoin ETFs effect, but its significance is already clear. At one point, these 11 ETFs were buying more than 10 times the daily production rate of Bitcoin, and that was before the halving. In the wake of this buying spree, Bitcoin's price skyrocketed from $45,000 to its current high of more than $73,000. With the added effect of the spot Bitcoin ETFs, plus the effects of the halving still materializing, 2024 is shaping up to be the year that Bitcoin hits the coveted 6-figure mark. However, it is imperative to remember that investing in Bitcoin should be done with the long haul in mind. To be honest, whatever happens in 2024 shouldn't matter all that much. It would be nice if Bitcoin were to keep rising, but even if it doesn't, the cryptocurrency's long-term potential would still be intact. Thanks to its finite supply, plus other intangibles like its leading levels of decentralization, security, and resilience, Bitcoin's value is positioned to keep appreciating as the decades pass. If there's one thing Bitcoin has proved, it is that it rewards the long-term investor. As halvings continue to compound on each other, holders begin to see portfolios grow. Whether Bitcoin hits $100,000 in 2024, 2025, or some other year, the cryptocurrency remains an attractive buy as it continues its journey of long-term price appreciation. Anyways, not a bad take from these guys and a reason you should continue staying bullish on Bitcoin and crypto as a whole. Okay, next, I would like to go over some coin recommendations to also diversify into that have a lot of potential. Before I do that, I wanted to recommend you guys check out the exchange Uphold. If you're looking to buy crypto, this is currently the #1 exchange that I use. And keep a considerable amount of money on here at all times for trading and long-term holding. Uphold is open to users worldwide, has a huge list of cryptos available, low fees, and great security. If you're looking for a safe place to hold and invest in crypto, I would definitely recommend trying them out. So there will be some bonus and resource links you can check out directly below in the description. And the first coin recommendation is going to be Dogecoin. And yes, I know what you're thinking, Dogecoin, come on, man. But seriously, even if you don't like meme coins, it still makes sense to have this one in your portfolio, because Dogecoin is seen by some as the original meme coin. The coin, which uses an image of the Shiba Inu as its avatar, is accepted as a form of payment by lots of large companies, and that will only grow in time. Dogecoin was created by two software engineers, Billy Markus and Jackson Palmer, in 2013. Markus and Palmer reportedly created the coin as a joke, commenting on the wild speculation of the cryptocurrency market. But since the market has matured, and this is one of those coins that could still give you a great return over the long term by simply holding. Next is Solana. Founded in 2017, Solana is a blockchain platform designed to support decentralized applications, dApps, also referred to as an Ethereum killer. Solana performs many more transactions per second than Ethereum. Additionally, it charges lower transaction fees than Ethereum. Solana and Ethereum can utilize smart contracts, which are essential for running cutting-edge applications, including decentralized finance, DeFi, and non-fungible tokens, NFTs. The cryptocurrency running on the Solana blockchain is called Solana, SOL. Since its inception, its price has risen tremendously. But as long as the ecosystem continues to grow on Solana, there is no telling how high the price can go over time. It's another one you should add to your portfolio. Not financial advice. Third is Polygon. Polygon Matic was initially developed as a layer 2 solution to address the issues with Ethereum network congestion and traffic. Recent innovations have allowed it to become a multi-chain system where blockchains can work together using Ethereum's virtual machine. Polygon uses 3 layers: Ethereum, Heimdall, and Bohr. Bohr is a block-producing layer that compiles transactions into blocks and creates a periodic snapshot of the blockchain. The validators on the Bohr layer are called block producers. The blocks from the producers are aggregated by the Heimdall layer, which validates all of the blocks created since the Bohr layer's last snapshot. It then creates a Merkle tree and publishes the Merkle root to the Ethereum mainnet. Polygon hosts smart contracts, dApps, NFTs, and has several other solutions for developers to choose from. Fourth is Avalanche. Avalanche is a highly liquid player with a significant market capitalization in the blockchain space. It provides a more scalable, interoperable, and decentralized infrastructure for building decentralized applications, dApps, and executing smart contracts, although it follows a different approach than other layer 2 solutions. Avalanche offers so-called subnets, which are child chains of the Avalanche C chain. This enables it to easily launch a dedicated blockchain for various use cases, as we have seen with DeFi Kingdoms, one of the largest gaming projects in the Web3 space. Its main use case revolves around high-throughput, scalable blockchain solutions, and it has been adopted by numerous projects seeking robust, decentralized platforms. The project's tokenomics looks solid, with a capped supply of 720 million AVAX and a unique mechanism where transaction fees are burned, reducing the circulating supply and potentially increasing the value of the remaining tokens. The Avalanche development team is led by Emingun Seirer, a well-respected computer scientist and researcher, accompanied by a team of experienced professionals from academic and industry backgrounds. The rapidly growing community of devs, validators, and users show massive engagement with active participation in governance proposals and community-led projects. I see a ton of potential for Avalanche surrounding enterprise blockchain solutions. And last up is The Graph. An open source software named The Graph is used to gather, process, and store data from multiple blockchain apps to make it easier to retrieve information. The Graph's goal is to assist programmers in using pertinent data to boost the effectiveness of their decentralized applications. The graph collects and analyzes blockchain data to store in multiple indexes called subgraphs. Indexers and delegators help process the data and provide it to end users and applications. Security is ensured through the use of GRT cryptocurrency. Users must stake GRT to fulfill their duties and receive payment from the network. According to some researchers, the graph became an essential part of the DeFi infrastructure. Popular Ethereum dApps like Aave, Curve, and Uniswap already employ this decentralized blockchain network. Anyways, hope you enjoyed these coin recommendations. Thanks for watching this, and we will see you all in the next video.